action. Stocks on the Lal Street gaining for the seventh day today, ending at the highest level that we've seen in a month. The Nifty and the Sensex gained 0.5%. Financial stocks led the rally this afternoon. Surbi joins us now to wrap up the day's market action. Surbi.
Well, it was the seventh straight day of gains on the street today, with the Nifty cruising above the 17,700 mark. Pretty interesting, and lots of power coming in from bank stocks today. That's where the surge came in from. With the Bank Nifty almost up 1.5%. A lot of the big names like an Axis Bank, ICICI Bank, SBI, all leading from the front. We've actually got some very robust business updates from most lenders, whether it is banks or NBFCs, and that really aided sentiment in this part of the market. For Kotak Mahindra Bank, there was an added fillip. There's expectation that its weight will go up in the MSCI indices when the index review happens in May. That could lead to an inflow of over $700 million. That was the expectation during the rounds, and that stock was a star performer on the Nifty with a 5% up move. Autos did pretty well as well, because we had the monsoon update come in, and it seems that maybe the monsoon won't be as bad as previously feared. That worked very well for stocks like Bajaj Auto, 52-week high on that stock today, Eicher Motors, Maruti, M&M. The entire auto pack was pretty nicely revved up, if I could say. The only sort of sore spot in the market today was IT. The nervousness is really palpable on the street ahead of earnings. TCS reports tomorrow. That stock was down. So was Infosys, Wipro, HCL Tech. Your entire frontline IT pack was reeling under pressure. The market is at a very interesting juncture now. The Nifty is now running into a very critical congestion zone around the 17,750 to 800 level, 17,800, and it will be very important for it to take out this level if the uptrend is to remain intact. Similarly, the Bank Nifty is looking at a pretty critical level around the 41,730 level. That's where the 100 DMA, daily moving average, comes in. So some of these levels and technicals become very important after the market has seen a pretty strong winning streak over the last few days.
All right, Surbi, many thanks for joining us. All eyes on the sky. The Met Department predicts a normal monsoon this year. Now, according to Met officials, rains during the June to September period expected to be at 96% of the long-term average. Weather officials also said that El Nino conditions are likely to develop in the second half, but they believe it won't have an adverse impact on rainfall. Take a look.
Most of the what is called central India, it will be a good monsoon, whereas in the west coast, in South India will be better monsoon, and maybe in the west coast some portion it will be less.
So we saw February temperatures rising, and you also expect in the coming months the temperatures to be higher than normal. What is the kind of impact that you are assessing?
See, basically the temperature is not the only criteria to be comfortable and other thing. The temperature will be every year, it will be increasing. There is no problem. But we have to see about how the humidity is going to change. So that is what humidity plus temperature comfort factor will be there. Yeah, monsoon is normal, so it is a good news. So we need to much worry about it.
Well, if it is a normal monsoon, it will certainly be good news. The Indian Met Department predicts a normal monsoon, as we pointed out. However, just 24 hours ago, private weather forecaster SkyMet predicted that the upcoming monsoon will be below normal. This is not the first time that we've seen a difference there in forecasts. SkyMet versus the IMD. Manisha's here with more on these differing forecasts. Manisha.
Well, thank you for that. Well, yes, contrasting forecasts from the government and SkyMet, but they do agree on few things as well. Firstly, Met Department is predicting rainfall to be 96% of the LPA. SkyMet has a forecast of 94%. So anything between 96 to 104% is considered normal rainfall. So even the government's forecast is at the lower end of what is considered normal rainfall.
We come out with the statistics, and result is about 96% of 87 centimeter will be there. Roughly about 83.5 centimeter rainfall will occur during June to September.
We expect that monsoon will be 94% of long period average, that is 8.6 mm. And El Nino will be evolving, and it will be much stronger in second half of monsoon.
So if the government's prediction comes true, this will be the fifth consecutive year of normal monsoon. It was in 2018 when India saw deficient rainfall at just about 91% of the LPA.
However, there are several key factors that can have an impact. Both government and SkyMet agree that El Nino-like conditions are likely. Government believes that El Nino is likely in the second half of the year and it will not have an adverse impact on the rainfall. Actually, from 1951 to 2022, the El Nino phenomenon was observed in 15 years. And out of these 15 years, we have had normal rainfall in 6 years. So an El Nino does not necessarily mean a deficient rainfall. Another point to note is the spatial distribution of rainfall. For example, last year we saw monsoon at 106%. It was above normal. The month of July in last year saw the highest rainfall in nearly 17 years. But despite this, rainfall in India's eastern and northeastern regions was 12% below normal. In UP and Bihar, it was 30% below normal. And let me conclude by explaining why rainfall is so significant to India. The kharif crops like rice, cotton, maize, soybean, corn and many more are heavily reliant on monsoon. In fact, kharif crops account for nearly half of India's agri-basket. So normal monsoon is absolutely essential for the agri sector and economy at large.
All right, Manisha, many thanks. Well, we all hope that it is the Met's forecast that is proven right this time. In the commodity market, oil prices remain steady on expectations of a potential economic stimulus from China, healthy demand in the rest of Asia and a drop in US crude stockpiles. Brent remained above the $85 a barrel mark. And Bitcoin rose above the $30,000 mark for the first time since June of last year. This as investors expect the US Fed to end its aggressive monetary tightening campaign soon. The major cryptocurrency gained 8% over the last 4 days. Bitcoin is up 80% this year, while Ether has seen gains of 60% in the same period. Market regulator SEBI has asked alternate investment funds to provide investors the option of a direct plan. Now, this will allow investors to participate in an AIF without having to pay a distribution fee. SEBI, in a way, has rationalized the fee model similar to what it did in the case of mutual funds. Sonal joins us now to explain what this means and how this impacts you and me. Sonal.
Thank you so much for that. Yes, it's an important update after the consultation paper that SEBI floated in the month of February. Now in a circular, they've gone ahead and said that yes, now AIFs will have to give an option of direct plan to the investors, which would involve no distribution fee or placement fee to any investors. So that is on the direct plan side. This option has to be given to investors by the AIFs in order for them to invest here as well. Now, AIFs that invest in AIF investments which are made via a SEBI registered intermediary will be onboarded via a direct plan only as per the circular. Now, this is on the direct plan. The second change that they've made here is in terms of the commission that is paid as well. In terms of this, category 3 AIFs, which is the third category, will charge fee on equal trail basis to investors, and there will be no upfront distribution fee here. For categories 1 and 2, there will be only 1/3 of distribution fees which will be paid upfront, and the rest can be paid on trail basis. So this is the news and applicable from 1st May as well. Now, why have they made this change? This is in order to ensure that there is no mis-selling and double charging of fees to investors in the current regime. As per the current fee structure, investors looking to invest in AIFs, they are prone to double charging of fees. One is, of course, via the investment fee by the investment advisor, and second is through AIF distribution fees. So in some cases, this could actually contribute around 5% of the total investments itself and become a big chunk. With this change that has come about, this would be done away with, as the distribution fee will not have to be paid by the investors via direct plan. Now, as I said, it was back in February when SEBI had come out with this consultation paper, and this is the reason why this change has come about. Now, just to give you a perspective, upfront fee is where it is paid to the broker in the same month as purchase of the fund, while trail commission is paid every year until investment is withdrawn. So now it will be done over years. So that will, of course, give some support to the investor as well.
All right, Sonal, many thanks for joining us. Kotak Mahindra Bank was the top Nifty gainer today after the stock soared 5%. This on the expectations of being given a higher weightage in the Morgan Stanley Composite Index. The review of the global index in May will factor in more room for foreign investment, and this could lead to a potential inflow of $750 million. In the disinvestment space, the government is planning to list the land assets of Shipping Corporation of India for sale this month. Sources tell CNBC TV 18 that financial bids for SCI will be invited after listing of the land assets. Remember, the government was planning to divest more than 63% of its stake in the company after receiving multiple expressions of interest in March 2021. Well, a new deal is brewing in the insurance space. Bandhan Group and IIFL Group are looking to jointly enter the life insurance business. Sources telling CNBC TV 18 that both entities are in talks to acquire Aegon Life Insurance to mark their foray into the sector. Yash joins us now with the details on a deal that is likely to be stitched up. Yash, what are you picking up?
Well, on March 14, CNBC TV 18 had reported that the Bandhan Group was exploring various opportunities to enter the Indian life as well as general insurance market through both organic as well as inorganic route. There has been a significant development on that front. What we've been given to understand from our sources is that Bandhan Group, along with IIFL Group, are looking to enter the Indian life insurance market, which would be through the acquisition of an existing but small life insurance company, which is Aegon Life Insurance. As far as Aegon Life Insurance is concerned, the embedded value of the company is around 430 to 450 crore rupees. And as per our sources, this particular transaction is expected to happen either at the embedded value itself or even a slight discount to the embedded value. As far as Aegon Life Insurance is concerned, the business at the company in the recent years has been struggling. The premiums collected by Aegon Life Insurance have dropped from 147 crore rupees back in FY18 to just 17 crore rupees in FY22. As far as the company's shareholding is concerned, Aegon India Holdings, they own about 49% stake in Aegon Life Insurance. Bennett Coleman, they own about 46% stake, and the balance, about 5% stake, is owned by Aegon Life Insurance Employee Benefit Trust. CNBC TV 18 has written to all the parties involved in this particular transaction. We are still awaiting a response from these companies.
Yash, many thanks for joining us. We will head into a short break, but up next, US, the banking crisis is not over and Western central bankers are likely to allow higher inflation in the medium term. That's the word in from Nouriel Roubini. More when we return. This is not over, and that's the word in from noted economist Nouriel Roubini. Speaking exclusively to Latha, Roubini said he expects more trouble for financial institutions in the US. He also believes that India, along with a few other emerging markets, will be a safer bet for investors to park their investments. Take a look.
I don't think it's over. I think there'll be more financial institutions going to be in trouble. And recently, the problems of the banks have come from what is referred to as market or duration risk, meaning having long-term securities whose value is falling as interest rates are going higher. But we're going to go from market risk to credit risk, because now there is a beginning of a credit crunch in the banking system, especially the regional banks that lend money to households. Suppose that the new normal is 6% inflation, then 10-year treasury yields, they'll have to go eventually to 8%, 6% for inflation and 2% real. Now they're at 3.5%. If they go from 3.5% to 8%, you have another 50% losses on what is supposed to be a safe, secure, and defensive assets. Trillions of dollars of dollar treasuries or EM debt linked to the dollar, or of high yield and high grade bonds. So the risk of significant losses, both in bond markets and even in credit markets, are significant. Structural factors for India go in the favor of India. Potential growth around 7%, maybe higher with more economic reform, a young and growing population, a catch-up of per capita income because it's much lower than China. So India is going to be a rising power in the next few years and decades with additional economic reforms. So certainly India and a few other emerging markets might be a good place to invest, both for fixed income and even in the equity markets.
And you can catch that special conversation on Indianomics at 5:30 p.m. and 10:30 p.m. right here on CNBC TV 18. Well, we promised you that it is raining exclusives here on CNBC TV 18, so let's get straight to one of our big stories this evening. The sun has set on the Emergency Credit Line Guarantee Scheme. Remember, this was the scheme that was introduced to help small and medium-scale businesses at the start of the COVID-19 pandemic. Government sources say the scheme, which ended on the 31st of March, has seen disbursals worth nearly 3 lakh crore rupees as against the total outlay of 5 lakh crores. The big takeaway is that only 4% of the disbursals have turned NPA, which is being seen as better than expected. Sapna joins us now with more. Sapna, ECLGS, the sun has set. What is the government's assessment of how the scheme has done?
Well, their assessment is pretty much clear, and I think this feedback has also come from banks that probably, especially during the emergency period of COVID, this was one of the better tailored schemes to handle the kind of distress, the economic distress that, that was pretty widespread. So if you look at the numbers are not, in fact, if not very kosher, then at least they're not too bad. Over 70% of the corpus that the government had promised, and they had kept on increasing that amount year on year. Almost over 3 years, they did that exercise. And over 70% in terms of sanctions, in terms of disbursements, and also in terms of guarantee. So that's not a bad number to look at. So if you look at the guarantee amount, it's 3.65 lakh crore. That's where the needle stopped on 31st March because no further sanctions post that. Of course, disbursements can happen up to June, but that's all that the window that remains. So out of that, if you look at it, and also in terms of, the bad loans, and there was a big fear at the time that the ECLGS was announced way back in May 2020 that this could be a big NPA turner kind of thing, maybe 10 to 15% would be the NPA rate. So if you look at those numbers, they're not really bad. 4.38% is where they are. This would be roughly around 16,000 crores out of the 3.65 lakh crore worth of guarantees that the government has given. Also in terms of the borrower accounts, around 1.19 crore are the guaranteed borrowers under ECLGS, out of which around 15% accounts have turned bad. So that would be somewhere around 18 lakh odd in number. So this is not a bad number at all. In fact, as per government sources, this is much better than expected, and that's where the picture stands as of now.
All right, Sapna, appreciate you joining us. That is the performance, the report card of the ECLGS. Now, the race for Reliance Capital has been paused. This after lenders to the debt-ridden company have postponed the second round of auctions indefinitely. Sources have told CNBC TV 18 that the auction was deferred as negotiations between suitors and lenders were still underway. The Committee of Creditors will hold a meeting today to deliberate on the new date. As we reported earlier, bidders have asked for tweaks in the terms and conditions of the resolution plan. The Supreme Court has granted permission to Vedanta to carry out maintenance work at its closed Sterlite plant in Tuticorin in Tamil Nadu. The decision was made based on the report of a high-powered committee formed by the Tamil Nadu government to inspect the structural and civil safety of the plant. The PM Gati Shakti National Master Plan has started its 5th regional workshop today in Varanasi, covering 6 states. With this, the entire country has now been covered. Sumita Davra, DPIIT Special Secretary Logistics, told CNBC TV 18 how several use cases of the PM Gati Shakti Master Plan are being shared with states to demonstrate multimodal connectivity.
We want to share these best use cases with the states and demonstrate to them how powerfully the Gati Shakti National Master Plan has been used to plan multimodal connectivity for logistics efficiency to the economic nodes and to the other areas. Similarly, the states are also sharing with us their best use cases, and we are learning from them as well. We are also conceptualizing our next steps on the logistics policy, on the ease of doing logistics in the country, how the states and the central ministries can work together.
And here's a quick check of some of the other headlines that we are covering this evening. The Bombay High Court has sought the government's response on the need to amend IT rules to fact-check social media posts. A petition filed by comedian Kunal Kamra says the rules are manifestly arbitrary and the government is acting as a judge and prosecutor in its own case. Congress leader Sachin Pilot, a bitter rival of Rajasthan Chief Minister Ashok Gehlot, staged a one-day fast in Jaipur today. Pilot is accusing Gehlot of not acting on the corruption allegations against the previous Vasundhara Raje-led BJP government. The Congress has so far not formally commented on Pilot's move. Also, there was no Congress branding at the protest venue. The Supreme Court has dismissed 2 pleas challenging a Delhi High Court judgment that upheld the centre's Agnipath scheme for recruitment into the armed forces. Essentially, the judgment says that the candidates who earlier got selected through recruitment processes like rallies, physical and medical tests for defence forces before the Agnipath scheme did not have a vested right to appointment. The former CEO of Twitter, Parag Agrawal, along with 2 others, have sued Elon Musk. The executives who were fired by Musk after his Twitter acquisition are seeking to be reimbursed for the cost of litigation, investigations and congressional inquiries. Chinese tech giant Alibaba has unveiled Tongyi Quan, an AI large language model like ChatGPT. This as the company looks to integrate the model into all of its applications. The AI model will first be integrated into Alibaba's workplace messaging app, and then to its voice assistant. It can be used to summarize meeting notes, write emails and draft business proposals. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned to CNBC TV 18. The news will continue on the other side.